Hey everyone, I hope all of you have been keeping well. I know it's been a while since we've posted any videos on the YouTube channel, but there's a good reason for that. Since we've been active, I've had a lot of reports or feedback from people saying they are grateful for the videos do work, but they are struggling with the psychological aspects of everything. They get the concept of technical analysis, fundamental analysis, but when it comes to executing trades and being consistent, that becomes a bit of a problem. So I'll just be analyzing GBP, JPY, or the pound yen. And as I do so, I'll just be talking on my experience and what you can do to help better your trading and your psychology as well as your consistency. So I'll start on the monthly charts of the pound yen. Let's see. Okay, obviously we have resistance way up here. I don't think they'll get anytime soon. We have, actually, let me just focus on what's currently happening. Let me not go far ahead. Okay, we had a support area here, right? And then I guess the next, let me just check something quickly. Okay, this swap zone has been used. Price might come back here and retest this as resistance. So most probably long-term on GBP, JPY were going up. And then on weekly, okay, on weekly, the support structure, the support zone is clear. We might go down for whatever reason, but I believe long-term, we should be coming here. Another reason why we might go down is because of this reversal candlestick. And it's on a weekly time frame, so that's pretty significant. As you can see, or just focus on this area here. For about 1, 2, 3, 4, 5, 6 weeks, we've had nonstop momentum upwards, just pure bullish price action. And then we had this reversal candlestick, and then the next candlestick was red, or was bearish. So that tells us that potentially we could have a reversal. Not sure for how long, but it is on the table. And then, hold on, let me just get this out of the way. All right. On daily, we have a clear change in market structure, but I don't want to focus too much on that. Let's say, okay, we see this. Let's say we are bearish or we want to sell the market, right? How would we go about doing that? Well, from one of the videos I think I posted on the channel, there's, you can call it a strategy, yeah. There's a simple strategy that anyone can use. We'll just go and review it. Let me just change the colors to, okay, it's 1. And then, no, okay, that's 1. That's 2. And then 3. And then let me just make this thicker. All right, cool. So I think I've done this before. Essentially, we have the 10 and 15 exponential moving averages, and then we have the 50. Whenever the 10 and the 15 cross the 50, that's a signal to buy. Like as soon as you have this phenomena here, where both of them cross the 50 moving average or the black moving average here, this would be a signal to buy. And then obviously the opposites would be true here. Now I know what you're asking, but it's on daily, how I want to buy this on daily, the stop loss and all of that. It's fine, we'll get there. First, we need to determine what we think is going to happen. Let's just say we want to sell the market, right? So currently there's no cross or there's no interception of the 2 or the 3 moving averages. But we believe at some point the market will be, let's just say we believe at some point something like this will happen. Let me just change this to line. All right, let's say we believe something like that. This drop will happen. So we then go down to a lower time frame, which is the 4-hour. And then on the 4-hour, we've had the cross already, right? The cross is already there, or the interception is already there. And then, okay, let's go to the 1-hour time frame. Okay, on the 1-hour time frame, we had the cross was here, right? Then since then it's been dropping. Then we had another one going up, but we said we still believe that the market will drop. So if that's the case, and then the market right now is here, all we have to do is we have to wait for another cross downwards. We have to wait for the same occurrence that happened here to happen here. Think on a lower time frame like M30. Okay, nothing has happened yet. We just have to wait for it to happen. So now someone might ask, okay, but how do I go about trading this? This is where psychology and risk management comes in. Okay, we're waiting for this, right? I think I can, okay, let me just delete this for now. And then let me just go into what I really wanted to talk about. Okay, firstly, the area of the community that I'm in currently is in South Africa. I wouldn't describe it as a particularly rich neighborhood, but then it's also not a slum. Everyone here they have money, but not in the sense that they can afford to fund accounts with thousands of dollars, sometimes not even hundreds. Usually they fund around like 200, 300, 400, 500, which is fine. You don't need a lot to start trading, but the problem then comes in them wanting to fast track that money into thousands or millions or whatnot. So I want to address that first. Let's just say you have you have 500 rands as a starting balance. Let me just write that down. Your starting balance or the amount that you can fund with is 500 rands, right? That's cool. So now the problem most people have is they see something they think is real on Instagram, and then they automatically want to take this 500 to maybe like say 5,000 in a week or a couple of days. They then think they can take this to this in a week or in a couple of days, which they can, but then this amounts to gambling. You're not really trading with rules or consistency when you want to flip accounts to this amount or by this amount in a week. Because in order to get this to this, one, you have to be lucky. Two, you have to open positions that are above your account size. So instead of, let me just do this. Just give me a moment. So we have normal trading and rushed trading. If you have an account balance of 500 rands, under normal circumstances, your position sizing or your lot size usually should be 0.02 at most or 0.01. So under normal circumstances, this would be your lot size here. And then under Instagram circumstances, your lot size most probably would be something like this. Again, there's nothing wrong with this or this. The issue comes when it gets to your psychology or your mind. So let's say, okay, 0.02, and then let's say per day, we want to get about 500 pips. So 0.02 multiplied by 500 pips. And then 0.10, excuse me, multiplied by 500 pips. This would amount to, I think 100, if I'm not mistaken, because I have to take into consideration the exchange rate currently. Let me just check. Okay, it would be $10 if we are looking at it from a dollar perspective. And then if you multiply it with the exchange rate, I think it's around 15 Rand something, 15 Rand 60, if I'm not mistaken. So it's about 156, if I'm not mistaken. So your average profit, if this is your trading model, whenever you trade, you want to get about 500 pips. That would equate to 156 rands per successful trade. And then on the other side, I think it's around 770, if I'm not mistaken. Let me just verify that. Yeah, 779. Now I know what you're thinking. This is much better and bigger than this. And I agree. But keep in mind the circumstances surrounding it. It's rushed trading versus normal trading. Now, this is where everyone gets messed up. Okay, not everyone, but most people that I've spoken to, this is where they mess up. This is your profit. Should have typed that actually. Hold on. This is your profit. And then same thing here. So now most people would be happy with this. Anyone would be happy with this. Now here's the trick. If it goes in your favor. If it goes in your favor. So now let's switch. Now we're going to do risk management. So let's say we want to make 500 pips, but we're only going to risk 100 pips. So our risk is 100 pips. And I think I should extend this actually. So risk is 100 pips on both sides. All right, so this is where things get interesting. So if our lot size is still 0.02, and this time we multiply it by 100 pips, which is our risk, then we do the same thing on the right. Oh, my bad. Now let's see what happens. So your total loss on the side, let me just double check, would be around 30 rands. Per trade. So your loss here would be 30 rands. And then your loss here would be around 156. So now my question to you is, if you have 500 rands, how long will it take you to blow your account or to lose all of your accounts using rushed trading versus normal trading? Under normal trading circumstances, if you lose, you've only lost 30 rands per trade. You're only opening one trade of 0.02. If it goes in your favor, you've made 156. If it goes against you, you've only lost 30 bucks. Then on the other side, if it goes in your favor, you've made 779. But if it goes against you, you've lost 156. And now, let me just do this. The market is random. There is no random. Yeah. There is no system. There is no signal. There is no robots. There is no strategy that can tell you with 100% certainty what will happen next. Anyone who says that there is something like that is lying. There is no way anyone on the outside knows what's going to happen ahead of time. So I just want to do this. I've done it before, but I want to emphasize the idea again. If you've been trading, you know that the market is random and it fluctuates. So your losses and your trades won't always be in the same order. So it 1, 2, 3, 4, 5, 6, 7, 8, and then 9, 9, 10. Okay. All right. These are just 10 trades randomly that I've just outlined here. So let's just say we're using normal trading, right? Our first trade goes in our favor. We've made 156. So the balance here is now 500 plus 156. But then the next 3 trades are losing trades. So this would be 369. It means we would have lost 90 rands from, actually, let me just type this in, plus 156. Then this would give us 656, right? That would be our new balance. And then the next 3 trades, minus 30, minus 30, minus 30, which would be 650 minus 90, 656 minus 90, which would take us to 566, which is fine. It's not a problem. Then the next 1, 2, 3, 4, 5, 6 trades are winners. So 156 multiplied by 6 is 936. So from this, we then add 936 for a new balance of 1,500 rands. This is normal trading, right? Cool. And then let's switch over to rushed trading. So rush trading, again, first trade plus 779. Right. Then we'd have a new balance of 1279, which is cool, great, in fact. And then we come over here, right? We have 1, 2, 3 trades that are losses. So it's 156 multiplied by 3, which is 468. So it's 1279 minus 468. Which gives us 811. And then obviously the next 6 trades are 779 multiplied by 6, which is around 4,674. So our new balance would be 4,674, which is great. So we are close to that 5,000 figure I had earlier on, right? And I know what you're thinking, this is great, I want to make a lot of money, cool. And then what happens is, because the market is random, you then have a scenario like this. And anyone who's traded knows what I'm talking about. There could be periods where you experience something like that. Because once your psychology comes into this, once you've made this amount of money from that, you then start developing a God complex, which is basically you thinking you know what's going to happen next. And then instead of keeping to the same lot size, you then change it. And this time you lose 1, 2, 3, 4, 5, 6, 7, 8 trades in a row. By this time, most people will have negated this system, or they would have looked for new strategies because they think the old one doesn't work anymore. That's not the case. It does work. It's just that the market is random in how it distributes wins and losses. So if you have 1, 2, 3, 4, 5, 6, 7, 8 trades, so we're still risking 100 pips. Now let's just see what the difference is. So now your average loss is basically 779. right? And how many of these losses did you have? 1, 2, 3, 4, 5, 6, 7, 8. So if we multiply this by 8, it's 6,232, and your account is gone because this was your balance and this is your new balance. I know someone might say, but it's impossible. You won't lose 8 times in a row. Trust me, if you've traded for a while, you know this is 100% possible. You can have 1, 2, 3, 4, 8 trades in a row, but then again, you could also have something like this. You could also have 8 winning trades in a row. It's just a matter of, are you willing to risk blowing your account? That's all. Because once you start making money, your psychology is everything. And if you haven't studied or listened to Mark Douglas as I've outlined in past videos, it's really going to be a struggle for you because without him, I don't know where else you can turn to. And you do get situations like this. It does happen. It's just a matter of, are you willing to go here or there? Personally, I'm here. I have no reason to rush. I'm okay with the pace that I'm going at. If you want to be here, that's cool. Just don't blame anyone other than yourself when you blow your account. So I hope the video has been insightful. I hope it's helped you in some way. And yeah, there's a lot coming from Billionaire 23. I'm just not going to give a date on when, but just keep your eyes and ears peeled.